After the recent bombing of Iran on Israel, cryptocurrencies are in an extremely critical situation. Here you are looking at Bitcoin, but pay attention to Ethereum, how they have broken, with great force, the guideline of what could be a distribution, generating a black swan. And in the same way, we can also see it in the Cardano chart. And now we are going to review it, but we are seeing the same pessimistic behavior in the entire crypto ecosystem. Frankly, it seems that no cryptocurrency is safe from being in a really critical situation. Look, for example, at BNB. Look where it is. That said, let's put some context into the Bitcoin chart in its daily time frame. You will surely remember that we are in a macro bullish channel. If we zoom in a bit here at the top of the chart, we will realize that the price was unable to reach the roof of the macro channel. That is why we have labeled this event as a market gap. In other words, it is buyer weakness, an event that made us think. And notice that I am already talking in the past tense, that a bullish climactic action could occur at some point to fill the gap and at least come into contact with the roof of the bullish channel. Of course then, probably starting a somewhat pessimistic path. But what I come here to tell you is that, frankly, the previous bullish climactic action is no longer looking clear to me. As I was saying, in the case of Bitcoin, we have buyer weakness here. Here they have distributed us, and here they have defended the position. The large institutions that have sold here masterfully have defended their position in this area, generating a gap against a structure, which makes us think that if tomorrow we were to see Bitcoin's price break through the structure holding all the compression, what we could see would be anything but positive. Because in the case of Ethereum, we are also working on a macro bullish channel, with the only difference that here we identify a distribution zone where smart money went short, on which we draw a volume profile and identify the point of control of the distribution, where at the time we analyzed that that point of control, the level of highest transactional volume, was the price level where Ethereum decided to end its search for the benefit of its bullish accumulation process, since the price reaches not the first target, but the second institutional target in a very precise way. We already saw all this at the time, but it is clear that these are concepts that we must remember. Now let's expand and analyze the following. If we are already aware that smart money has already obtained its benefit by reaching the second institutional target, and at the same time we are at a point of high transactional volume, all this fits together, and what we are seeing here is a wedge that is impacting against a very relevant level, on which that relevant level is composed of the two reasons I have explained to you, on which they have compressed us to break and generate what could be a black swan. And now we are here considering the possibility of working a flat pattern. But this is not all, unfortunately, although notice, I am not telling you anything absolutely new that we have not already discussed and analyzed in older videos, because here we have a strong bearish impulse in Ethereum, on which we see a W. This is a poor I, and what we are seeing explosively is a Z by the book. And ultimately, this distribution is the very guideline of the Z, as an explosive Z usually works its own guideline. And remember that the objective of a Z, which is nothing more than a complex corrective pattern, is to have a strong directional bias that will go to the guideline corresponding to the corrective pattern. So you can see if there is a bias to want to lower the price. It can do three things. One, reach it, another reach it and break it, and another stay halfway. But all of them involve a bearish bias. Having said that, we must not forget that here we see a creek, a distribution that started here at a micro level, which defended the position, all this in its entirety. It is a macro distribution, which has its creek. If we go to 4 hours, it will be much clearer. The price breaks tests not once, but twice, and now we could be working on a flat pattern. And we know that flat patterns, after breaking a relevant structure, can be the final frontier of whatever movement the market might be expecting. And if we add to this the concept that in Bitcoin we see a very evident deceleration of buying force, just look at the range of this bullish impulse. See how the range is weakened. Not just once, but on the third occasion, the force decreases again. This type of exhaustion in price where they compress it against a macro structure, which leaves us with a gap implying buyer weakness. Well, all this together obliges us then to have a macro bearish predilection, already without expecting said bullish climactic action. Therefore, until proven otherwise, we are going to continue looking down. Since it seems very potentially, we are going to continue having really negative news about Iran and Israel. Since Israel has stated that it will respond to the attack of the 300 missiles and drones drones perpetrated by Iran last weekend. And at the same time, Iran has already said how it would respond to Israel if Israel plans to respond, which it has said it will do. And what Iran has said is that instead of 300 missiles and drones, this time they would use 1,000, and they have even threatened to use a new weapon that would surprise them. Things are very hot. In a very simple way, we are going to continue to see negative news in the press. That could influence the idea that inflation could increase. Therefore, central banks are forced to raise interest rates, and these events would harm the traditional market and, by contextual correlation, also the cryptocurrency market. As we already discussed in the previous video, that cryptocurrencies are not seen as a store of value, rather as currency, and if at the same time I tell you that privately we have analyzed the traditional market and everything points to be negative in the traditional market, then that's where the narrative changes. That in Bitcoin we no longer expect the price to reach $78,000, but rather we are bearish while it is not said otherwise. And now I'm going to explain to you how we see the crypto market in general, the rest of the altcoins, and what it means to be bearish while not seeing otherwise. This way you are going to ensure not to miss the next opportunities that will come in the crypto ecosystem, and I'll explain all this to you now. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Let's analyze Cardano. In the weekly chart, we have looked for a new structure that can explain what is happening in the markets under this crypto-pessimistic hypothesis, in which we see a strong bearish impulse where the market is giving it continuity with a bearish channel. This structure, frankly, like it or not, is there? We go down to the daily chart and we are going to analyze. We are going to look for where the compression against the roof of the channel could be. I'm honest with you, it has been very difficult for me to identify a creek here, since we cannot really say that we are facing a textbook creek, but by pure cross-analysis, we can interpret that this is where the Cardano creek should pass. We go to a 4-hour time frame, and here you will see better where we defend the hypothesis of having our creek here. Well, here we are seeing how the price has rebounded against this structure with great force, with great volume. They have come to do a test, and now we could be working on a flat pattern. In other words, the flat pattern can simply thrive, break down, and continue with a macro bearish path. In the case of Solana, in the 4-hour time frame, here we see a very macro structure which is quite distant from the current price. We identify a creek, a full-blown distribution from head to toe. If we zoom in a bit, we'll see the black swan very clearly. This has already occurred in Solana at a micro level, and now the price is simply continuing the bearish impulse, so the bearish bias of the market is also present in Solana. We'll see how they work it out, since they can do a bit of everything here, either fall aggressively now or play around before, but ultimately the focus is bearish. However, if they break this macro structure, the drop could be significant. We would see strong declines. Frankly, we don't know if this will happen, the strong drop, but we do have a bearish directional bias, at least in Solana, until the macro structure. Obviously, everything is still to be seen. Anything can happen, and no one here has a crystal ball. Now, looking at the SHIB Inu chart, I think it's an open book in itself. Look at its 4-hour time frame. Of course, we broke a creek from a macro accumulation that we've been monitoring for quite some time, but I think it's evident that after the strong, aggressive bullish impulse, here we can see a bearish impulse that the price is following with a bearish channel. Exactly. We identify that we had a defense zone that was breached, causing a black swan event. And you know, when we lose a defense zone, we have to wonder where the buyers are who no longer decide to defend their position. Now, the defense zone doesn't help us much, but what we're observing is this impulse that has created a supply line, and institutions are accompanying the price to continue pushing it down. If you look at the bearish channel we've been in since early March, we'll have to see if this manages to push us down. But we have that bias. It's not very positive to see such a black swan event over a defense zone, that's for sure. Here we have Polkadot in its 4-hour time frame. We see it was in a macro bullish channel, which I think is very evident from what we've experienced. We're seeing a black swan event here, which, as you know, is not very favorable for any market. Now, what the price is relying on, in this case of Polkadot, is this defense zone, because as you're observing, we're in a critical situation situation. It's better for the price not to break that defense zone, because if it does, the cataclysm could then be fierce. But remember, as I've mentioned, we are bearish until proven otherwise. This means that from Crypto Insight, we don't believe we know the future, where we can guarantee absolutely anyone that the price will fall in the long term. Frankly, no one can assure you what will happen in financial markets, which is why from the abstraction of ego, we must assess what we need to see on the chart to think the opposite of our beliefs. In this case, what do we need to see on the chart to be positive in the crypto ecosystem? Pay attention. If we're saying we're in a macro defense zone, which is this one here, who's to say that here we're faced with a creek? That here they might set up some kind of trap or what? Only to recover and break the creek later? In other words, as long as the defense zone is protected, the bearish idea could change. But you know we're truly pessimistic if we're offering a one-way projection where we only talk about one direction, which is bearish. But we must, of course, be prepared for a moment of potential uncertainty. In other words, if we're bearish, we can consider that at some point the defense zone may be breached and the price may then simply continue downwards. This is something that could happen, although we know what we need to see to dismiss this bearish hypothesis. In the case of Chainlink, they're telling us exactly the same thing. Here we have a black swan. Here we have the creak of a distribution, and the price has come to a halt on a defense zone. In other words, if this defense zone holds, then we'll have been wrong, and we're facing a fairly critical zone where the price should turn around very soon. But of course, seeing these kinds of events is not entirely positive. If we look at the rune chart, we see how major institutions are frankly playing with fire, because if tomorrow we saw this break forcefully, we'd see a macro black swan that would indeed push the price significantly downwards. Something no one would want to see, but in case we see something similar to what I've described, it would be a situation we should prepare for. The same goes for XRP. We expand the chart a bit. We know we're coming from a bearish impulse, that this is a W, that this is a poor I, that this is a Z, culminating with a time-consuming pattern. This could be a prelude to further bearish movements. All of this, of course, is yet to be seen, but that's what could potentially inform us. And here, we simply say that we're at a critical borderline point in a structure. Just like with Rune, if we see the price break forcefully, we'll be facing a black swan, and this would paint anything but a pretty picture. Do you know what you shouldn't see then to be positive in the market? And if you look at the BNB chart, let's zoom in a bit. Let's look at the 4-hour chart where we see an uptrend channel which has lost momentum, has lost strength, and now they're attacking its trend line. As we see in XRP, Rune, Link, and other cryptos, many of them are in a critical situation where if the price decides to break forcefully at some point, many pending black swans would blow up. We would see Ethereum breaking the flat pattern, therefore it would actually eventually be negative for the ecosystem. Here, I'd like to say that it's important not to panic, as we are of course sharing a bearish idea in the markets. Now we're at a point of uncertainty due to the Iran-Israel war, and frankly it remains to be seen how smart money uses the upcoming and new news and how these will be catalyzed in the quotes of both the traditional market and cryptocurrencies. What I mean is, it's okay to have a bearish directional bias, but that doesn't mean we're going to stick to that idea, since our goal and our daily routine is to observe, analyze the charts, and update our structures to identify smart money positioning. And if we see something change, then we'll simply start looking where it indicates smart money might be looking in all these ideas. If you liked this technical analysis, let me know in the comments. Also give the video a like, subscribe to the channel, and click on the bell icon so YouTube notifies you of future publications. Good luck with your trades, and until next time.